Good evening, everybody, and welcome to tonight's edition of Live Market Analysis. It's a pleasure to be with you as markets apparently have stabilised, haven't they? We're all good now. We're all bottoms in. We're heading back up, perhaps, and there's nothing to panic about anymore. We'll talk about these concepts and more after we discuss the disclaimer. That's what I forgot to do. I forgot to center myself on the screen. Couple of cats and a couple of kids, so this camera never stays in the same place between two Mondays. The disclaimer says that the content of this presentation is general, has not taken into account your personal financial circumstances, objectives or needs, so before acting upon it you should consider all of those things carefully or seek the help of a financial professional to determine its appropriateness for you. The most important thing on there, of course, is that trading is risky. You could lose money. You're probably going to lose money, so go into it eyes wide open, knowing that that is a possibility. Ultimately, it's you who's responsible for the stuff that you choose to do and not me. Tonight's agenda, we have a bunch of new people actually starting today. A few people got in touch with me via X. I sent out that tweet last week to everybody else reminding you that the daylight saving change had come through. I might as well mention now before I forget that next Monday is Easter Monday, so we won't be doing a session on that day for obvious reasons. People are away or just tired and would rather not be doing it on a Monday evening after a 4-day break. So we will pause and then we'll resume 2 weeks from today. But as I said, new people coming on board. So the way it works is you get into your chat window there, you ask a question, I'll do my best to answer it. It could be stock related and I'll give you my opinion on that stock. You'll get the gist of it pretty quickly. It could be something to do with trading, so methodology, mindset or money management. Let us kick off, as we always do in these sessions, with the money management model. So we have a bunch of rules basically that govern how we behave in the markets, whether it be on an individual trade basis, so selecting from longs or shorts, and then how much. So on top of that, there's another layer determining how much capital we can risk at any one point in time, and it changes in basically a fraction system, typically in thirds. At the moment, we are at the most conservative setting of 1/3 invested. Last week would have been, obviously today's 14, so last week would have been 7, so find 7, there's 7, but we wouldn't have had that candle yet. So if we zoom in, last week we had this candle, there you go, that's it. So that's the Friday candle that we would have had to discuss, and that candle looks pretty darn dire. At how quickly time flies, it's almost hard to imagine the panic that we woke up to, I guess, Saturday morning for many of us, and then had to trade through on that Monday. So, yeah, I mean, we were rightfully so, I think, given that candle, albeit it was moving into a bit of a demand zone. So what? About as horrific as you could get. So we were at maximum risk setting, and then since then, is there any reason to move off that at this stage? I don't think so. We're not trading above the short-term trend ribbon. We're not trading above the long-term trend ribbon. We can't see higher peaks and higher troughs. And it could be argued we don't yet have a predominance of demand-side candles, although we're getting very close. So I think with that candle there, and particularly that candle there, which is the almighty monster, what happened to trigger that candle, of course, was President Trump, in his infinite wisdom, deciding to put a pause on the bulk of those tariffs for 90 days, including all of the reciprocal tariffs ex-China. So we're back to just the base 10% and Chinese tariffs. And, 12% rally on the Nasdaq. It's only happened that time and another time in the history of markets. To put into perspective, ladies and gentlemen, what you just traded through is something extraordinary, and it took President Trump to cause it. And look, since then I discussed on Friday our time, the nature of that candle was really a fighting retreat. So yes, it was down on the day. Yes, all of the headlines told us that it was we were falling again, but you knew better. You looked at that price action. You said actually today really is. I think the demand side actually won it today, and then we saw that follow through on that was Thursday, so that's Friday, and here we are. Long story short, or long story still long if you prefer, and nothing's changed. Still maximum conservative level. It won't change until we get above the short-term trend ribbon at the very least, high peaks and high troughs. So you might be saying, hey, Carl, that's not fair. You know, I really think that's the bottom and I want to load up. And I'll say, hey, you can do whatever it is you want to do. That's up to you. If you're following the model and you prefer to follow the model, I should say, you could load up to the whole 1/3. You could not have as many shorts in the system to make that 1/3 feel as long as possible. These are the things you can do if you want to follow the model. The model cannot pick the bottom. That's impossible. It needs all of those things we talked about to occur. So if you want a model that picks the bottom, you need to move, I guess, more to a fundamental-based model or a mean reversion based model if you want to stay with technicals, and that's not my model. So you might say, hey, Carl, you should develop that model. I say, yeah, well, I don't really need it. That's not the way I trade. It's not what suits my style. I like to be in the market when there's a really nice trend and I feel I have the best probability of success, and trying to pick the bottom. I've tried to do that many, many times, and I've found that I get it sometimes, but more often I don't, and it causes me to trade in a very inefficient, ineffective manner. So I don't do it anymore. So just a bit of a summary of where we're at. I think that's pretty clear. I'm just giving you some of the reasons around why I choose to stay at that level. In Australia, again, we don't have any of those key factors of high peaks and high troughs, predominance of white demand side candles, although we're very close again. Trading above the short-term trend ribbon, testing, holding above the short-term trend ribbon, doing that on the long-term trend ribbon, showing a short-term uptrend. So we're very much in flip a coin stage, really, isn't it? I mean, we could just as easily hit that light pink zone there, throw in a bunch of upward pointing shadows, and down we go again, because the next panic has befallen the market, and that's obviously the same for the composite. If you want the day-to-day ebb and flow of what levels to watch, then catch my market index wrap, because it's all in there. Okay. So given we have decided not to change our risk position, let's see if we can go around the grounds and find a reason either to change it or reasons at least to confirm what we think. And that's Russell 2000. We know that is the heart of corporate America. We know it's small cap stocks. They're more sensitive to President Trump's policies, let's say. Is that showing as strong a rally as the Nasdaq Composite? It's not. That's concerning in itself. So that would give us reason to back our current view. Let us head over to Europe. Actually, a very, very modest rally there. We're looking at France, of course. Let's go zoom normal. And in Germany, also, I think, quite a modest rally. No reason here to move off our level. And we were talking not that long ago how the FTSE was holding up really well. And then, of course, you reach that inflection point, as you do many times in markets. You push to a certain point, and then it just flips like that so often. So no reason to change our view there. Hang Seng's bouncing actually pretty well off that long-term uptrend ribbon. The Nikkei hasn't bounced that well. The Nifty 50 didn't fall as much, but probably hasn't bounced as much either. And over there in Shanghai, a fairly muted response, I'd say, both ways, fairly neutral there. We've talked about Australia. Let us head over to the sectors and see maybe there is a sector that's showing some promise in terms of moving back into the market as close to buying a bottom as my model could possibly do. Good V-shape, that's a V-shaped bounce in discretionary, so that's encouraging there, but still far too early for me to do anything about it. Energy hasn't bounced. What does that tell you? You've had a 12% rally, only happened another time in history, rally on the Nasdaq, and I know they're different stocks, but it just shows how far behind energy is. Financials, much the same as discretionary. Gold still looks fine, doesn't it? So we're seeing where the relative strength is and where the fund managers are still flooding into. And sometimes in a bear market, you find that one sector that is still okay can absolutely rocket, overshoot to the upside, because it's the only sector where momentum traders can put their money, and they can push it way past quote unquote fair value. Healthcare still very much in the doldrums. Information technology, I put that in the same category probably as discretionary and financials, where we're showing some form of V-shaped bounce up to this point. Decent rally in materials, credible. A little bit less so in resources, slightly different composition. Property, not the case. Staples, very, very strong, all things considered, as is the telecommunication sector, but that's the Telstra index, as we call it. Utilities, neither here nor there. Before we run away, let's do the base metals and lithium. So we're going to go to a line chart. You can see aluminium on screen, a little bit of a rally there. I think it's fair to say that if things were all good in the world, these would have performed better perhaps than that little bit of a rally. Certainly stocks are doing better than what base metals suggest. Base metals are the canary in the mine shaft for global economic growth. So that's a little bit disturbing. Again, we're looking for signs to move off our risk setting, and we're not seeing it. Decent rally in copper, certainly. Decent rally in nickel, but very much still in the doldrums, as is lead. Tin had a massive collapse. I suspect, I was going to say it wasn't tariff related. It probably was, but there might have been something else at play, is what I'm intimating there, because it's such a disastrous reversal. I think if you're holding MetalsX, you probably understood what was going on, and Zinc a very shallow bounce. So let's say all in all, not a great performance there from base metals during the week, and that's a bit disturbing in itself. Going to show you lithium carbonate before we leave, and that continues to bounce around the bottom with no light at the end of the tunnel in sight for the futures. The spot price there over to hydroxide very much flattening out, and we're just in an equilibrium here where, as a bulk commodity, it looks like we've found our long-term price trading somewhat near the cost of production. Let us head over to the TradingView screen now, and we'll finish off our whip around the grounds. I had a question about Bitcoin. That's you. I don't want to see you. So let me go back to here. And we actually probably have to go there and change it. This happens when I start late and I forget to do. There we go. Let's try that one. There we go. That's where we want to be. I forget to put it on the right screen. How do we? From Hayden, I want to be prepared for when the time comes to buy Bitcoin again. So how do I do it? I'm not comfortable holding actual Bitcoin on the blockchain through a crypto exchange. You don't have to hold it on an exchange, I guess, or with a non-custodial provider. You could actually hold it in a crypto wallet. So that's another way to do it, and it would be held off the exchange or offline, for want of a better word. Can you recommend another way to trade? I guess if you didn't want to have your keys, put in a safe place and in a cold storage. That's the word I was looking for, cold storage wallet. CFDs, yeah, look, you suggest CFDs. That's, I think, a very credible way of doing it, because the CFD providers are at least licensed here in Australia. Certainly they are, and many of them who operate the bigger ones are also licensed in other parts of the world. So they undergo an onerous regulation regime, meeting all those regulations, and probably even for many of them are listed on stock exchanges, so they have to have certain reporting requirements as well there. So some of them financial prudential regulators as well, so they may have minimum capital adequacy requirements too. So yes, in terms of safety, all of those features are consistent with most CFD providers, the bigger ones, and they are not consistent with most crypto exchanges, okay, who are generally subject to far fewer regulations and or capital adequacy requirements. So I think that is a sensible way to do it. ETFs, I think that's also another credible way of doing it. Trade it just like a share, and there is one or two off the top of my head on the ASX, and there's probably a few more if you wanted to trade through the NYSE, again, through a stockbroking platform. Generally, it's pretty easy to get access to those. There can be high costs in holding CFDs. Exactly. CFDs are a leveraged product, so there is generally an interest rate paid on a long position. However, you have opportunity costs with holding an ETF, because you have to take your money out of the bank where you were earning interest, and obviously invest in the ETF, you're not earning that interest anymore. So there's a bit of a spread rather than the whole holding cost to consider there. So look, I don't have any answers for you, but I don't have any specific answers, because that's not my role here. Okay, I'm not your financial advisor, but I can confirm that the two options that you've offered up there, if you don't want to go the non-custodial Bitcoin exchange, crypto exchange provider route, are both sensible and credible ways of doing it. Let us go, and that's Bitcoin on screen. So that's probably enlightening for some other people that I think would agree that the next time Bitcoin's showing a great trend, and is it possible that Bitcoin has another zero behind it at some stage? So that is, it's roughly 100,000 now. It's roughly 1 million down the track, and it'll be the center of the headlines again. Of course, it's possible, and we'd want to participate in that next leg. Whether I don't think it'll go straight to $1 million, but it might be going from 100 to 150, 150 to 200,000. So a relevant question, I think, Hayden. We don't need to do anything on Bitcoin now. As you can see, we don't have the trends to support that. We don't have the price action to support that. We don't have the candles to support that. If anything, Bitcoin is kind of looking like turning its trend, isn't it? And if it was, I don't want to say it already has, the fact that that long-term uptrend ribbon is no longer acting as a zone of dynamic demand, but really looking like a zone of dynamic supply. I'd say the balance probability is just lying towards actually moving into a long-term downtrend and possibly coming down into maybe the high to mid-60s if it was to sort of complete this sort of move and come into this next demand zone down here. So we could be a bit of a ways away from needing to use that information, Hayden. Let us quickly move back through those futures and Forex, and there's unfortunately nothing to see here on silver. Was taken out as one of those liquidate anything that was going up during that downturn, and the irony for silver is that it hasn't come all the way back like gold did, because it was always going to be a distant second. You just don't have that same demand supply scarcity or desire to hold it as a store of value with silver as you do with gold. And we're seeing certainly gold, or those characteristics borne out better in the gold chart. I can't see any reason not to trust the gold trend at this point in time. There's just not a candle on there to cause me to do that. The price action, I guess, could be better, but because obviously this last trough is beneath the trough before it. But we kind of understand why that occurred. It was short and sharp, and a V-shaped recovery is usually the best kind. Copper moving back roughly into mid-range, a little bit more like silver. There's ultimately, I guess, plenty of copper around there. It's an industrial metal. It's not a precious metal or used as a store of value. Iron ore off initially, but back a little bit. Uranium bumping around the bottom. Nothing to see there just yet. Having a look at some of these energy contracts, we'll head over to Brent crude oil. Huge drop there on, I guess, Trump's mission to bring that down and make energy cheaper for Americans, but potentially also to undermine his good friend over there in Russia, perhaps, and find a solution that way. You never know. It's all part of the art of the deal, is it not? Thermal coal, still very much in the doldrums. A little bit of a bounce there in coking coal. That's the coal used to make stainless steel. Not stainless steel, but just steel. Okay. Yeah, you probably need it in stainless steel as well. Heading over here to the price of money markets, we'll have a look at the US 10s. They still went up on Friday. You're probably wondering how does that happen? How is it that this chart went up, so yields went up, and stocks went up as well? Because we were at a point not that long ago where this was rocketing and stocks were crashing. And yes, that was certainly a relationship. I think that relationship is broken down to some extent, and what we're left behind here is a structural move away from the US dollar and US treasuries as a risk-free store of value, I guess, or a reserve risk-free asset. And I think we are possibly seeing selling from BRICS countries and Japan, potentially this idea of, well, screw you, America, right? We're not going to hold your debt. The 30s are important because this is typically the benchmark for US mortgage rates. So there are some calls that the US is already in recession, and we just haven't seen the numbers print yet because those are we get those very much in arrears. So if that's the case, and we are in a significant downturn in the US economy, and we've got mortgage rates spiking, then that's not good at all. And this is just some of the consequences that President Trump will have to face due to his trade policy. And look, for one of putting it in a better way, the technical term is pissing off everybody else that America does business with. Okay, let us head over to your offline requests, and there aren't many, so if you're online, we'll get to yours very, very soon. But we've got 3 from Mick here, and we're going to start with Droneshield, which, look, I'll admit is a very difficult one to trade, and if you've traded it from ChartWatch, you probably agree. You probably did well on the first one, and then maybe break even on the second one, and probably a bit shy of trading it the third time, which I think is right. Let's head back here. So the first trade was here, and actually there were some shorts through here. So that was probably the second trade, was shorting it through here. And then we on this candle, we chose an entry and probably an add there and probably an add there. And I think on this candle here, I had it in session. I said to take some risk off the table. Just because I didn't like that candle, or it might have been on that candle for that candle. And that was, I think, a decent suggestion. Pretty much neutral through here, as in I don't think you'd be in a position long or short, and that's where we are today. Look, I think in summary, Mick, I can see why you might be interested. And hey, this could go back up to 280, I don't know, but I just think there's got to be an easier path to a turnaround setup, because there's still a lot of work here that needs to be done. We obviously have a big point of supply up here, and I think it's just about trying to have as few headaches as possible. Is that there's plenty of headaches out there to be had, so let's minimise them. So I think we've got some supply up there around about 112 through to 120. There was plenty of supply there last time, and there's no reason why there still won't be late supply. A lot of people got in and around that level, and a lot of people would have regretted that decision down here and just be waiting to get out. Certainly working in favour of this, some good price action. Like that is really solid price action. There's some decent candles in there as well, and some of that period includes some difficult times for the broader market. So we can see actually some improving relative strength comparative down here as well. Very solid candle today. Gap and run. There was some news out today. They also won some contracts, probably assisting it there. It has done a dink, to be fair, at the long-term trend ribbon, but I would question the validity of that long-term trend ribbon when we did really fail to hold it in any decisive manner. So long story short, Mick, look, it's just in the too hard basket for me. It's in the ho-hum basket. And why can't you just select yourself, please? And therefore, I'm a pass. I can see what you're going at. I wouldn't tell you not to do it, I think. I mean, and it's not me sitting on the fence. I can see why. I mean, does it meet the criteria? Well, the price action's good. The short-term trend ribbon is not strictly up. It's not strictly down either. We've got a dink at the long-term trend ribbon, which is this flat one here. So in theory, we could argue it's a turnaround setup, and therefore, if you were that way inclined, you could do plus 1/3. If you didn't have it, well, then I think that's quite a simple scenario. It's FRP if you didn't have it, but if you did have it, it's FRP, and if you didn't have it, then plus 1/3 if you are a sucker for punishment, and that's So it's a pass for me, but this has got to be about what you're interested in doing. Okay, develop global. Let's get rid of some other stuff. It looks like we had a plus 1/3 on that day, wipe out on that day. That's a species ending event. Do not pass go, do not collect $200. Didn't do a whole lot after that, to be honest. Delete all studies and zoom out. Again, Mick, I'm questioning whether or why we're spending time on this. I get if you had it, maybe you might have had it through here. So certainly I can see a signal there if you wanted to. Maybe a signal there, a bit of an upper shadow, but certainly at least one. So I'm just trying to paint a picture here of why you might have put this to me. I don't know. You're offline. You didn't tell me. You just literally gave me 3 tickers, which is frustrating. Tell me what. Tell me why is where I'm going with this. Tell me why you're interested in them. Tell me what sort of setup you're looking at, because I'm not a bloody mind reader, mate. Like, are you looking at this for a short or something? I don't know. You could be. And here I am giving everybody all the different scenarios to try and help you when I probably could just do this in 10 seconds and move on to everybody else's stuff if I knew what you're getting at. So there's a bit of a public service announcement for people who, please send me offline requests, because I know everybody can't be here, but at least give me some bloody clue as to what you want to do with it. Okay, let's, again, here I was trying to assume maybe that he had it, so to give you the right, not advice, I don't give advice, but the right logic, right strategy. If he had it, well, I would say, why? Why do you still have it? Because it collapsed, and there were plenty of candles and price action along the way, and I would say, just for teaching's sake, after this candle here, I cannot find a reason to still own it. Okay, so we had, well, not really a trough, that's actually not a trough, but that candle in itself is pretty ugly. This candle tells you that the supply is definitely lurking in the system on the day it tried to rally. That's an ugly candle as well. For me, and think in your mind whether you agree, I think that's a level. So this candle here becomes a problem, and maybe you gave it another day. But hopefully we can all see through this, just going through this logic, that this is the point here of no return. Like you cannot possibly, knowing everything I've taught you, after that point of no return candle, continue to hold a full risk position. You've seen that big candle come in. Okay, so this is warning signal number 1, right? So we'll call this W1, warning signal 1. And even if you didn't do anything after that, and I don't mind if you didn't, right? Because it didn't close on the low. It looked like it was trying to hold that short-term uptrend ribbon. Even if you didn't do anything on that, it has to get your attention. It must. And then if we go to warning signal number 2, okay, we tried to rally, but look at that long upper shadow. The supply, the latent supply in the system, right, forced it back down again. We got a rally, and that's brilliant. Sometimes the best thing we can get as traders is a reaction the other way, so we can see how the market responds. Okay, so let's show that shadow there. That's the warning, but we can see that the latent supply is still pushing the price down. This is warning signal number 3. Not sure what happened there. Let me escape that. Yep, I have no explanation for that. Never seen that happen before in Amy Broker's history. I'm going to change that W1 to a W2 because this is going to be W3. And confirming that the supply side now, I believe, is in control of the price. We get the close beneath that trough there, so that makes that W4. And I don't know if you want to in your own time snapshot this and use it as a case study. And then of course we have our point of no return, where for me, taking risk off the table, or really moving in the next candle to be zero risk position, and certainly even that next candle confirms. Okay, so Mick, trying to give you all the scenarios here, give you all the opportunities to learn from this case study. Let's say unequivocally here, no doubt about it, ZRP. That's where we're going with this, okay? All right, so now let's move to the next scenario. Let's tick that off. There's the learning takeaway. You didn't do it. Why you didn't do it? Hey, that's up to you. What do we do with it now? Okay. Bloody hell. We have got dynamic supply in the system, I guess, from here. I mean, we can see that starting to interact through that upper shadow. It's also coming from that long-term uptrend ribbon. Decent rally, would I call it V-shape? Yeah, look, I think it is. Probably is a little bit of a double bottom through here. It's not the end of the world. I think, if I'm really honest with you, you're not that far away from here, are you? I mean, you're not that far away from where you should have got out. And let's just leave it there. Let's go to the next one, which is SGI. Oh, probably the other scenario is, should you buy it now? So let me do that one for you. Should you buy it now? I put to you, does it meet any of my criteria? That's all I'll say about that. There's nothing else needs to be said. And I think everybody else listening tonight, apart from the new people that started tonight, knows the answer to that question. Now we're in business. Does this meet my criteria? Well, yes, it's going to tick all the boxes. The price action could be better in that we've got lower troughs, but we also had a market collapse. Okay, so we can forgive that. We need to be sensible and reasonable about these things. It's a common sense system. It's not a black box system. And certainly we've got plenty of relative strength to demonstrate how well this is done. Today's candle is absolute perfection, as was the previous day's candle, which was a down day on the ASX. So that's impressive as well. I can't see anything in here, all things considered, including the relative strength comparative, so how it's traded against the market. Nothing in here to suggest that we shouldn't be an owner and that we shouldn't, in addition, be running a full risk position. I think we can see here the value in my soft stop, I guess you would call it, model, where we're looking for a close beneath there. It wasn't far away, to be fair, and if you did on that day, I wouldn't complain. But order of magnitude, we probably would have been reducing risk by a third. If you did 2/3, I wouldn't complain, but we would have kept some in the system. But in theory, probably still keeping a little bit of skin in the game, and then adding some risk back today. So I don't think the model was completely awful on that one. FRP, if you've got it, that goes without saying. If you don't have it, I can't see any reason not to do add a third to this. I think it looks very, very strong. It didn't come up in my scan today, which is curious and concerning, because I really should see these when they happen, even with that turnover filter. So I'm wondering why it did come up tonight in the scan. I'll have to do some other research on that. So that's a bit weird. So I'm glad actually that Mick's brought that one to my attention. Okay, let's head over to the online requests from Avant. Hi, Carl. Hope you're doing well. I'm doing well, Avant. Can you please look at SIG, APA and TLX coming up next for new risk? Okay. So new risk implies, I guess, there's a setup. The setup in this case is a continuation setup. We've got double greens on screen. Price action is a little bit mixed. Again, not surprising that we're seeing a couple of lower troughs in the system on the basis that the rest of the market collapsed, didn't it? So we're actually seeing some really solid relative strength here in comparison. The price is going sideways, but that's still better than the market. I think we've got a very solid area of demand through here, beneath which, in close proximity, beneath which we can look to exit if need be. Okay, so that's always very handy. This candle here, I think, is the decisive candle. That sets us up for adding fresh risk at some stage. The only question is, do we have another candle here that would warrant it? And we don't. I mean, today's last candle here is nothing. It's a nothing candle on an otherwise very, very strong day. That's pretty solid, and that's pretty solid as well. But we're probably splitting hairs. I think you've got a couple of options here, and that is obviously FRP goes without saying. Okay, there's no reason here not to continue to be in full ownership, and we'll talk about where that would change in a second. Couple of scenarios. Plus 1/3, because everything else meets the criteria. The candles aren't that bad, and why split hairs? Or just wait for a next high close as well. Okay, so that's really, who cares how big the candle is? I think in this case, just next high close, but happy, I think, either way. Now, if we were to end up trading somewhere beneath here, okay, so closing beneath this area here, that's when I think we would reduce our risk. So close less than, let's just say minus 1/3 for the time being, but depending on the candle, it could be more than that. Let's go to APA, which has done really, really well, all things considered. It may struggle a little bit, which is a little bit unfair as well when you think about it. It's done so well, but it may struggle because everything else is bouncing back, right? So this did well when everything else was melting down, which means that when everything else rallies back up, it might get left behind a little bit. There's nothing so sinister in the price action to suggest that it's going to be so far left behind that it will actually go down and cause black candles and closes beneath the short-term uptrend ribbon. It's just not in the price action at this stage. But understand why. Because one of the most frustrating things you're going to do as a trader is that day where everything's up. You go look at your favourite stock or all the stocks in your portfolio and they've done nothing. And you think, well, the whole world's against me, the market's against me. It's not the case. It's just that you're probably in a basket of stocks that just are not being targeted at the moment. Now, long story short here, FRP, there's no reason not to be a full risk position. We're obviously not adding a third of risk on that one just yet, but next high close. Okay, next high close. There's a reason why it was so strong. Okay, and that reason certainly could push us back into another excess demand style market for this one. Telix is next. Got some problems here. I did think a couple of weeks ago now, probably, we looked at this candle here. I'll just point to it. And we said on the basis of that, it's worth adding a third back in the market, putting a toe back in on the long side. We might find that day there, I don't know what happened on that day, isn't it? We didn't do a whole lot really, but it wasn't not long after that we obviously had the news break of the tariffs, and down everything went. So unfortunate timing, but it doesn't change anything, right? That's a setup that would have definitely been in a losing position at some stage. Okay, and the point of no return is well, there's actually a little trough here as well, isn't there? So I think taking some risk off the table, if I just go points 1, 2, 3, so I'd say there is an easy one, and probably not this one because it bounced off the long-term trend ribbon, but certainly there. And if you're still holding, you've got a third at best, at absolute best here. Okay, and it all happened very quickly, but you can't really take risk off the table on a day like that, can you? Even though it's down, it's still such a demand side candle. Nor that one, nor that one, nor that one, nor really that one, and here we are. So maybe you've got a third in, just using this as a case study of how stuff can happen. Would we be adding risk to this one? No, I don't think so. We don't have the candles for it just yet. The price action is actually uptrend again, so we're here, here, here. So it's not terrible at all. If we were to get another high close, I think it would confirm the price action again. It would further confirm the holding of the long-term uptrend ribbon. So to put that in perspective, it's a decent place to test and hold. Getting above the short-term trend ribbon would be handy. And again, it would be something really, if it occurs, and it hasn't occurred yet, if we saw like that sort of candle again, and we'll put a question mark because we're not seeing it yet, but a really strong demand side candle coming in here, then we could go, so we'll go next high close, is typically what we do, and then it could be a plus 1/3 if that occurred. Okay, moving on. Adonis has got, hi Carl, hope you're well. I'm well. Thoughts on ASX stocks of CBA and REA as turnarounds? Good. Let's go CBA. Yes, I put this in the shortlist tonight, and I don't know. I haven't created the feature list yet. I actually haven't even put them on TradingView yet. You would have noticed. I've had a few things on this afternoon, but it did make my shortlist. It probably make my feature list also. Actually, I made this some really strong candles. Double hold of the long-term uptrend ribbon. Nice dink here, tremendous candle here, test and hold. It all looks good, and we know obviously whatever that was the meltdown, wasn't it? The response to Friday's meltdown. That's the Monday, and prior to that, it was going well despite the nervousness in the markets, and that's why we're seeing this. So you could almost discount this move here and shift all of this back up. I think this is extremely strong. So it's an FRP for me. That goes without saying. And yeah, look, I think it's a plus 1/3, and I think it's going to. I haven't done the features yet, but I think it's going to figure pretty highly in that feature list. Let's go to REA. Nowhere near as strong. No, I think it hasn't. It was getting belted. I know it's rallied, but it's rallied with everything else. At least CBA, through roughly this stage here, was rallying on its own accord, showing its own unique relative strength. So I don't think REA is in as good a boat. However, yes, it looks like the long-term uptrend ribbon is holding. This is concerning. CBA didn't have a big black mark against its name like that does to show you. I mean, if CBA, there is a little one there, is it? Sorry, I stand corrected, and I'm referring to this. Okay. And the next day, if we go back to REA, yeah, the next day wasn't as strong though, was it? So we're talking about that one there. Okay, and I think this is far more severe. I think we can all agree on that. It's ho-hum. What would need to transpire? I think, a push into that little supply zone, a very shallow dig, and potentially, a nice lower downward pointing shadow in there could be interesting. And we're looking out to the future, which is kind of a pointless exercise. But, if we said next high closed in here, in and around that zone, then we could do plus 1/3, but not for me right now. I think there are more pressing opportunities. APA would certainly fall into that category. Very, very strong as well, like CBA on a relative strength basis, which, look down there. So yes, look, I don't mind on this one. A little bit of an upper shadow today, but I think, I think I can see it. It's had a good run. Maybe try and find something a little bit closer to its light green ribbon. If there's nothing, if you can't find anything, and you're desperate to get risk in, because you wanted to do FRP, then I could go this one. But I tend to want to try and find them just a little bit closer to breakout. That's all. But no questions, no qualms on that one. I just need to see it. I haven't done the shortlist yet, so I don't have in my mind that comparison. And we've done all of yours, and there's one in the US we'll do a bit later on. MS, what does the M stand for? MS, let me know, please. It's always really good when people just tell me your name. I don't know why you're just initials here. You're not in a public forum. You're like, it's a very private forum if you're wondering. The only way to get into this forum is to contact me directly or be invited by one of yourselves. How do I see Carl in full screen view? I don't know. I can't answer that. I can only speak from my side of the fence, but I'm sure somebody else will help you with that. Upendra, it's the first time. Welcome, Upendra. I hope to learn more from you. I would like to know your analysis on RS of ASX sector. What is that, RS? And what indicators you use to know the relative strength? So, Upendra, you're new. All you need to do is send me your TradingView username, and I'll give you a custom indicator that I've built myself to determine the relative strength comparative. And it's not the relative strength index, like you see on most trading platforms, because that's 3/4 of useless. It really is. I mean, learn what it's actually telling you and you'll understand it's completely useless. You might as well just look at price action, right? But it compares the strength of the security that you're looking at against a base index. So you can change the base index. So if you're looking at US stocks, you might use a US index. If you're looking at Australian stocks, you use an Australian index like the ASX 200. And green is good, red is bad, I guess, or red is bad for longs, green is good for longs, and red is good for shorts. Green is bad for shorts. So that answers that question. I'll give you an indicator to help you do that. I think RS means relative strength there. Okay, but that's a very minor part of it. It's important, but it pales in comparison to the importance of the price action. Forget what's on screen, it's just random. Just slipped off that one. So price action, candles, trend, dynamic support and resistance. These are the things that are far more important. Rishi, hi Carl, it's my first day here also. Thank you for providing opportunity. You're welcome, Rishi. Thanks for joining, and feel free to contribute. Amber's got NEM, which is looking good. Gave us some nervous moments, I guess. This was that fateful day, wasn't it? Black Monday, where You probably got tagged on a few things. Some of them stayed down, but fortunately for this, you really can't exit on a day that looks that good. Reaching into the long-term uptrend ribbon, massive downward pointing shadow, and closing in the high. They bought this all day. They really did buy that all day. And they bought it all day there and all day there. I know that doesn't look like much of a candle, but there's a huge gap. So a lot of this is white, and that should show through in the optimized true range. So you see that's showing through there, and then that's a monster day as well. I mean, these are all at risk days, and today as well. I don't think I'd add risk today. I think happy just to sit with what we've got. There is a major point of supply here, and we're seeing some of that supply manifest itself, or excess supply manifest itself in the market with that upward pointing shadow. So FRP for me, I can't see any reason not to run a full position here. You might say, oh, look, Carl, I might just take a third off the table because we're at that point of supply. I think that's being a little bit pedantic at this stage because we don't have a very strong supply side showing, do we, to justify that? So we do what's justified, and I don't think it's justified. If we see a big black candle tomorrow, big upward pointing shadow, we can be more confident that that supply is going to be sinister enough to cause at least a pause, maybe even more than a pause, a pullback. And then 1/3 might be warranted. But until then, no, I think it's FRP. Are we going to add a third? No, I'm going to just hold off on adding a third. Look, next high close you could, but not for me, just on the basis of that upward shadow, and it is showing the manifestation of some of that excess supply in the market at this point in time. So let us just be happy. I know a few people are on this. Certainly it went in as a feature chart there, went in as a feature chart there, went in as a feature chart there. So apart from one little hiccup, it's done, I think, pretty well. Hopefully it's done well for you, Amber. Lynas, which we said last week, and look, hey, it was the relative performance last week was exemplary, to be fair. And we opined, didn't we, whether, because we had Black Monday and it was up, wasn't it? And we opined that you needed to have your head read. I think the person who asked about it, he said, do I need to have my head read? I think this is a buy. And I said, look, no, I don't think so. I mean, it meets all the criteria, and it's actually a strong setup. The only problem that I had with it was this potential supply zone there. And if you look at the candles since, and it's funny how it turns out this time, pure coincidence. It turns out I was right. There's got to be other times where it's pure coincidence. I could be wrong. And I obviously drew that section on screen, the one I'm trying to move around a bit now, and drew some price action arrows which looked like this, saying that we might see it push up into that zone, probably have a pullback, and I might be more interested in it if it was to show the right price action around that zone. I don't think it has. It's kind of done almost exactly what you would expect here, isn't it? And this is quite a powerful move down, and I think it's fairly safe to say, looking at what happened leading up into that, what do you think? I mean, seriously, what do you think? Were there a bunch of suckers caught this time round? And if you've been in the market long enough, no doubt you've been a Lynas sucker at some stage, right? We've all been there. We've all been a sucker on this stock at some stage. So I don't mean that in a derogatory way at all. I mean, poor unfortunate souls. And then, they got what many of us have received out of Lynas. Like, we think, finally, this is the time. No, it's not. Fast forwarding to the end. But it just, there's a very high probability that these suckers here, right, are the same ones causing that excess supply and those black candles. Because you look at it from their perspective, finally, they've waited all that time, they've finally got back to break even. I guarantee many of them are promising themselves they will never trade Lynas again for the rest of time. And that's probably a sensible way to go about your business when it comes to this particular stock. Long story short, I can't buy it with those candles. If I had it, I'd be concerned. I would be concerned. We are seeing some serious supply manifesting itself at a place where we would expect that to be the case. It's hanging on for now. I'd be looking to manage my risk. I think even beneath there, like a close beneath that, and Lynas is probably going to do one of those again. So look, all I'm saying is I wouldn't want to be a full risk position if it was to close beneath there. Let us keep moving. Amber's got BNR, which is Bulletin. Okay, I thought it might have been this. Another one, Barton Gold. That's a different code system, but that's doing really well also. This one I hadn't seen. Probably it might have, you can see here, it's not meeting my minimum turnover filter. So you just see where I'm hovering there. We've got a 0. So that's why I haven't seen it in my scans. Doesn't mean it's bad, it just means I haven't seen it in my scans. I'm really curious, Amber. I'd love to know what drew you to this, or if you bought it, if you got in. Because, yeah, look, these are the turnaround setups that we do like. We do have a short-term uptrend. We're interacting with the long-term trend ribbon. It's turned orange. We do have some price action moving back in the right direction. It's very sketchy. Don't worry, I'm not going to call this a buy just yet. I'm just saying there are some things that are moving, that are showing up for it. This candle here is the one that you would arguably say is a buy. God, I hate these dashed arrows. They drive me bananas, and they appear for no good reason. There we go. So that's the one, I think, at the earliest you could say there is a setup here, turnaround setup. I would put to you that this is such a sketchy chart. It's hard to say whether that is a dink, that famed dink we required. For people that don't understand what the dink is, I can see why. But in this situation, we want to see the price move typically above the long-term trend ribbon and dink, it's just a silly word, dink back and put in price action that looks similar to that. Okay, so it's just another way of saying test and hold. Okay, and we're looking for this. This is the key to it here. And once we've done that, then we are all systems go for moving back into it. So, you can see why you would use such a model, because it would keep you safe this whole time. Okay, even through here, no reason to buy, but now we've got something special going on. Okay, agent history, of course, it had a huge move here, probably some news. If you got in there, you're very, very happy. If you didn't, is it too late? I mean, this candle, it's a big drop back from its high. There's a good component of it is black. It is probably saying at least a period of sideways movement, at least. And that's at best. And then at worst, or it could be the end of the show for a while. Okay. So, yeah, it's one of those where it was a bit sketchy as to whether it was actually a setup, just on the basis that you can see so many days here. Look how many days the stock traded, the open, the high, the low, the close were all the same price. So it's very sketchy price action. Hasn't come up on the turnover filter. It's one of those where I've probably spent too much time already just trying to explain it. But, sometimes they can be very, very, very powerful moves. I don't think this was quite there. What do you do with it now? If you bought it, I don't know. I think if you got in at 5, I think 7's half decent. Maybe take some risk off the table. If you don't have it, no, I think it needs to do a bit more work again before I'd have a go. Let's go to MTM for Robert. This one definitely came up in the scan today. I think it looks decent. I'm just questioning this upper shadow here, Robert. Could have closed better. Probably could have even had a little bit more volume as well. Otherwise, yeah, look, a very decent showing, and certainly holding that, I think, quite well. A few points of supply on the way up, but that is the nature of these turnaround in uptrend setups. Okay, it's sort of a turnaround / continuation setup. Okay, it's got elements of both. I think if you are saying, Carl, this is the absolute strongest setup I could find today, hands down, no doubt about it, like this is the one that has to have, it just must have my money, I would say you probably weren't thorough enough in your research. Okay, if that's what you say to me. So I can see it. I get where you're going. I'm not sure this is going to be the strongest setup though. But I don't think that's the response you want. I think you want to know, Carl, should I buy it tomorrow? There's nothing in my model that says you can't buy it. I know that's a bit of a cop-out. I'll tell you, I would personally, I'd pass. I know I'm going to find stronger stuff than that, okay? But if you've got a hankering for it, you know the story, you know, all of these factors could come into play on a personal basis for you. On that basis, if you're interested, okay, to answer your question, because you're interested, that's where I'm going. Yes, I can say if you've got it for FRP plus 1/3, if you don't. But I'm flat out looking into the camera and saying, would I put my money on that? No, I wouldn't. That's what I would do. You can do whatever you want. I don't think I could be any clearer than that. Okay, let's go to MPK, which, okay, still looking good. I would have been very, very concerned after this day here, but I suspect is that, once again, is that the Black Monday move. Actually, it's Friday, but Thursday in the US was a big fall as well. I don't know if you recall, it was a massive fall. And then Friday it fell again. So it's a move in line with the calamity that we had, the craziness of last week. I would have been really concerned after that one. It's such a strong supply side showing. I wouldn't have run with a full risk position. I think I would have taken at least a third off the table there. And I reckon almost on that day there, probably taken another third off. Just you know, that's the way you would have been thinking on that day with that close, right? So I struggle to see how, if you got in earlier on this, and I know I had this in the watch list here as a feature chart, probably even there. I struggle to see how you would have held a full risk position this whole way. Okay, I still think you'd have a third though, and so that kind of shows, well, as bad as it looked, and it looked bad, and you can't tell the future. You didn't know on that day, the day after that occurred, where it's hovering, that Trump was going to, you know, backflip, like unprecedented. You didn't know that was going to happen, and then everything's fine again. And of course, if you just took out the stupidity of this Liberation Day, this one probably would have been fine. That's the most frustrating thing for me. Like, if we just cut out that idiot, right, and that week of absolute freaking chaos, like, it would have just saved so many trend traders so much time. I don't care about everybody else, but just us lowly, unfortunate trend traders. Long story short, and I better hurry up because I'm going way too long tonight. FRP plus 1/3. This looks great. I can't complain about that at all. It's a very, very strong setup. Let me just make that a colour you can read. There we go. Let's go to Robert's got Droneshield as well. And again, that cannot be the best one. Like, if you're going to pick three and send it to me, that can't be one of the best three, surely. PME, I'm curious, for plus 1/3. I can't see it. I think it's too early under my model, but that doesn't mean it ain't going up. But it just means that it's too early for me. The first I could look at it is more like this. And I know you might say, oh, we'll have to wait for it to go up to do that. But that's just the way I operate. Look, there's a reason why it was hit so hard. It wasn't hit hard because, you know, there was only a little bit of supply, or there was only a little bit of doubt, both from people holding the stock and people looking to get in. So I think there are probably going to be so many others that are going to lead the way out of this turnaround. And probably, look, it'll follow, but it may not follow as well. But that's, yeah, I mean, you've got a cluster of white candles, you've got a V-shaped recovery, caused again by extraordinary events. And I wonder where this might have ended up, if not for that backflip. So it's a pass for me on that basis. I have to follow the rules. I'd love to see it trading above the short-term uptrend ribbon, and therefore by default also the long-term uptrend ribbon. It might seem superfluous to you. It's not to me. And a little bit of a ding and some nice price action, some candles. It's still a ways away. Needs further cooking. And as you say there, exactly what you said. Sorry, should have read the rest of your message. Peter will do your US dollar and Euro and US stock when we get to them on the way back up. Don't put any more in everybody, because I won't do them. I can see where I need to finish. From I think that's Hayden with the initials. If you can change your username to put your name in, please do, because I want to call you by a name and not HC. What do I do with HC and MS? Let's go to, I think that's Hayden. Let's go TNE. Similar to PME, but at least it's above. At least it's above that trend ribbon. The fallen heroes of 2024. What do we do? Look, don't discount these. They were good before, they can be good again. PME included, okay? I just need that one to do a bit more work. This one's far closer along the line. It's actually in the short-term trend ribbon right now. It's holding the long-term trend ribbon. It's actually done a little bit of an extra dink there, to be fair, at the long-term trend ribbon. If not for the events of last week, it might have actually not even gone through. It might have just held it. We'll never know. So this is a stronger one. I still think, it's very close. It's very close. It's that close because of this. If you're wondering why, there's your little dink. There's the dink right there. Today's candle. If today's candle was just a little bit taller and closing on the high, I'd have less trepidation. Look, let me do it this way. I'm going to hedge my bets a little. I'm going to acknowledge that it's done what I wanted. So in these situations, are we going to have lots of these right now? Yes, we're going to have lots of these. They've tried to hold. Probably would have hold. We'll never know. Crazy stuff happened. They sliced through. Okay. Miracle on Wall Street, or miracle in the Oval Office, whatever you want to call it. We're back up here again. Okay. Don't ask questions. It's just happening, everyone. Let me get rid of some of these again. Okay. So it's just a function of where we're at. Okay. So this is what I want to see now. Okay. We've got maybe a little bit of a point of supply here. So this is it's a good case study. So is PME, because there's lots of them out there. They're the 24 heroes. Okay. So yes. Okay. I think I just want to see another high close, and then it's a very speculative, because a lot of damage has been done, and we're still waiting really to be convinced, aren't we? We've still got a short-term downtrend, for crying out loud. The only reason we're entertaining this is because we've tested that short-term downtrend, and we've put a dink in there, and we've got a nice high candle. The price action has moved back into high peaks and high troughs, so that's why we're allowed to do this. Next high close plus 1/3. Now, philosophically speaking, portfolio management speaking, how many of these do we want? I don't mind having a few of these. Fallen heroes, they got hit hard, they'll rally hard. So yeah, I don't mind having a couple of these. I wouldn't have most of these, for example. I'd still be skewing towards continuation setups, right? They should be the least volatile. They may not go up as fast as everything else, but they shouldn't go down, because they didn't go down before. Why would they go down next time? Continuation setups, more traditional turnaround setups, so not these sort of 50-50 long ones, and having just a few of these, like one or two of these types of ones, and we've seen a couple tonight. Okay, so just in terms of how we're skewing our long side setups across different types of setups. Okay, JBH I think is the next one there. From Hayden, JBH. Okay. Whew. Okay. Hopefully it all just clicked for you. Give me a thumbs up if it all just clicked. And I haven't said any words, have I? Because the picture, there you go. Oh man. Here I struggle to find the words, try and explain it, trying to get it out of my head in a coherent fashion. And then something like that comes up, ladies and gentlemen. Okay, we just all answered our own question. Like CBA is another example, but I think this one's a little bit more obvious even, testing into that zone. It's done so much better than PME, hasn't it? It's done so much better than TNE or Telix. But I think you can see what I'm going for and what I'm trying to achieve with it. Anyway, so this is simple now. It's FRP plus 1/3. Oh, that's a relief. Okay. Maybe Hayden's setting that up for me. Let's go a couple of US ones. FRP, new people. FRP stands for full risk position. Okay, full risk position. And all that means is if you own it, if you own it, keep all of the shares you presently have. That's all it means. For risk position. Okay. It's just, Rupam actually saying that. Thanks, Rupam. Robert AZY, I still think that looks very good. Came up in the shortlist today. And I don't know if it'd be shortlist, just with that upper shadow. You know, I'm just really looking for stuff that had that perfect close in that shortlist. But make no mistake, chart is fine. If not, again, for the craziness, probably would have just kept sailing without a care in the world. But still, we're very happy with the way it's performed. Yeah, look, if you're that way inclined, plus 1/3, no complaints from me. Definitely made the list. Perry, US stocks, we'll do those in a second. Thanks, Perry. Carl, tonight there are no symbols in your watch list. That's correct, Robert. I haven't got around to it yet. Sorry, I did have some after school commitments to attend to today, and therefore I'm a little bit behind. We'll see how I go tonight. If I stop talking very quickly, I might be able to get on to them tonight. Otherwise, I'll get them done for you tomorrow morning. But that is true. They're normally up, as you say, as you would expect, around the same time. But I will, from time to time, ladies and gentlemen, apologies in advance, have stuff to do. I do those in my own time. Okay. Let's go to CAT. Look, a really interesting one, isn't it? What a fascinating bunch of case studies we're getting tonight, ladies and gentlemen. We're ZRP prior to this. So for the newbies in the webinar tonight, ZRP equals 0 risk position. Obviously, the opposite of full risk position. It means equals no reason to own based on model. Okay, so the model suggests 0 ownership. Okay, so we have suggested in the past analysis here at ZRP. And for the new people, I like to draw on the screen. And for most of the times, we'll keep those drawings so you can see what we're looking at the past. You can see FRP through here. Beneath that certain level, we would have done 2/3. It never got there. FRP, if it closed beneath there, we would do something. It actually didn't. FRP. Minus 1/3, minus 1/3, FRP plus 1/3, and then ZRP for whatever reason we said after that species-ending event. So generally you can see the history of it. Sometimes there's so much stuff on the screen. On a particular week, I'll go right-click, delete all studies, and then that's why you might not see anything. It doesn't mean there wasn't history, it just means I need to clear the screen so we can see what we're drawing. Tonight, however, we have some good price action. So full credit here to CAT hitting that long-term uptrend ribbon, which we believe is an area of dynamic demand. Certainly appears that way. Compared to the rest of the market, I think it's put in a very credible showing, although interesting, not really doing much here. I guess in percentage terms, it has fallen behind. I don't mind this. It's meeting all of those other criteria. It's dinking in the short-term trend ribbon. Obviously, we've got some shadows here suggesting that there is still some latent supply in the system. We're not full bottle true believers just yet. We're going to encounter some supply here. And that's just part and parcel of where we are. We're going to have a lot of these setups. So you might say, and you'd be justified in saying, you know what, Carl? I don't feel like playing right now. There's just too many setups out there. I know we're going to run into all of this supply. Okay. And it's just phases. It's a phases of the market thing. That's the phase of the market we're in. It wasn't that long ago, I hope you'll agree, that we're sort of in a phase where there were literally 100 things, no kidding, 100 things all making new highs. And there was no resistance to speak of because we had gone through that phase. Okay, and you just happened to tune in at that time. Okay, so you're perfectly justified in saying, I'm not so sure about this. And you should be saying that, like Droneshield, a few other things that we've seen tonight that I would go, I'm not so sure about that. I don't know if I want to fight this battle. And if you came back in 2 months' time, 3 months' time, and everything had turned out the right way, I don't see a path to that, by the way, just with the stupidity that's going on at the moment. But let's hope it happens. And we're in, and the market is all my lists, all Carl's lists are all looking like this again. Like, what would you really have missed out on, right? You would have missed out on probably the bit from here to there, right? And I think there's There's a lot to be said about having that sort of mentality. Like, I'm taking a lot of risk here that this is going to turn out to be that scenario in a couple of months' time. Oh no, I'm really confident. I'm really confident everything's going to work out just right and we'll be in that scenario. I don't think you can say that. So the people that are asking about these things, I get it. I can see what you're doing and you're doing the right thing in terms of, yes, they are technically setups, but they come with them a higher risk, or there's a higher risk attached to them, okay? What do we do with this? A very challenging set of setups this week. So if you're forming your own ideas, I think that's good too, okay? I need another high close at least, and that's at least here. That's at the very least. We're in close proximity to some of these other levels, right? I think I need to see it first. Yeah, I'm going to go pass on that. I'm not going to write on it. If you had it, I can see why you'd go FRP. ASFET next high close plus 1/3. I want to see where that is. I kind of want to see where it is in relation to the other supply zones. Oh, look, you know, not 1/6. So I do mean 1/3 there, but anyway, I'm uncertain. Apologies if I don't have all the answers for you tonight. You know what I mean? Like, all things considered, I think what I'm giving you tonight is probably the best you're going to get. I'm sure there are other gurus out there better than me, though. Look, Cogstate, another tricky one. I guess maybe we've got some people who are in this and maybe asking about this one, not so much to get into it, but from the perspective of, well, how do I manage this one? And I think we're okay. Another one, I know I'm a broken record, which probably would have been fine if not for the craziness of last week. And I say that because it's actually held up really well. And today's candle is very strong. I think we've got enough risk on this one. But if you're really, really itching to add risk, and this is what we keep coming back to, then add some risk. FRP, let's just leave it at that, shall we? I don't think you need to do anything. I have probably been a bit remiss on some of these and saying where I would reduce risk, and I think we could see quite clearly there's close beneath here, and I don't think we're doing 1/3 beneath there. I'd say a minus 2/3, and that would be a minimum beneath there. Okay. Let's go to. I keep losing my place. LRV. So that's disappointing as well. Look, it's bouncing pretty well off that long-term uptrend ribbon. Like, you know, hooray for the long-term uptrend ribbon. It really got a workout in the last week or two, hasn't it? This one, we need to see a dink or we're in trouble. This is a really severe downturn. I mean, we're talking 110 to 60 cents. It shouldn't do that. And what that creates, such a severe downturn, I do feel it's going to create a lot of latent supply in the system. A lot of people stuck in this one, probably wanting to get the hell out. So where is that supply going to kick in? Look, it could kick in here, an old trough, often a good place to find future, so old demand point, good place to find future supply. And we're actually seeing that upper shadow just perfectly pushing into that old trough, isn't it? So I'm a little bit concerned about this one. I'd almost say, in fact, I'm not almost going to say, I'm going to say, look, just as a precautionary measure, precautionary measure, minus 1/3. Just like do not pass go, do not collect $200. Just get that out and just feel a bit better about it. Don't have as much skin in the game, and I'm probably going to make better decisions one way or the other. If it keeps going up, happy days. I've still got 2/3. But if it does start to peel back off again, at least I've got some out. I'm going to be in a better position emotionally to deal with that also. So precautionary measure, knock 1/3, better or worse tomorrow. That's what I would do. You will do whatever you want to do. Now, from there, it will get very interesting. Either we're going to see something like this, okay, and then we'll need to continue to manage risk, right? Or we're going to see, and I'll do it in a different colour, we'll do it in light green perhaps, we'll see, we're seeing a bit of supply coming in, so we'll still probably see a little bit of a dink, but it'll be a very shallow dink, and up we'll go, and then we'll see something like that. Okay, and in that case, we've got 2/3, and I'm going to suggest you probably 2/3 is enough until we can deal with this, which, given these candles, is probably going to take an absolute major feat, because there was pretty concerted supply up there in the past, could be there in the future. A lot of tricky setups. That's what I think about that one. If you're looking to get into that, Michael, because you're actually calling this a turnaround setup, you're not actually putting this to me as, oh, well, I'm in it, Carl, what do I do now? You're saying, should I buy it? Well, 100% you would need to see those green arrows. And even then, I put to you, so much damage has been done, I don't think it would be worth it, but that's just my opinion. It would have to throw in the most almighty candles and demand signal for me to be interested in this again. So I actually should have read the rest of your question there. Does full risk position mean keeping the full existing position? It certainly does. Okay, Barton Gold. Somebody's got their mic on, so turn it off. Is that you, Michael? Hold on. There you go. Mute. I muted you. CSL, Barton Gold. Sorry, BGD. Magic. FRP plus 1/3. And what a great setup to slip in now, if only to put into perspective the sorts of setups that we really should be looking at. There you go. Zoom. Normal. Let us go. Thank you for reminding me of that one. Adonis. Floyd's got CSL, which Floyd's new. He said he's surprised it hasn't been mentioned. Floyd, generally we want to ask questions in relation to one of the three setups, which I'm not going to go into today because it's at the wrong end of the session. But there's a continuation setup, double green, looks something like here. Okay. There's a turnaround setup, which kind of looks something more like that. Okay, around here. And then there's an aggressive setup, which would probably not appear on CSL, probably ever, but we'll show you that another time. So CSL meets none of those criteria. If anything, what we've been doing with CSL is shorting it. Okay, so from about these cluster of arrows here, these are all short trades from here even probably. Okay, so people that are short CSL, do we need to cover back? No, I don't think so. Out of all the stuff that's bounced, that's one of the most pathetic bounces, I think. Don't you agree? I mean, that's a pretty pathetic bounce. So if you want to keep some short exposure, you want to keep the weakest ones, and that's still that. However, if the candles do get whiter, they get higher closes, we will certainly start to act and take risk off the table on this one also. So neutral at best, certainly wouldn't be adding short side risk to this one. As far as whether you would be buying it, that's not my style. You know the deal, you probably got an idea, I'm a trend follower, so I need to see double greens and stuff like that. Could this be the low? Certainly you could argue, Carl, that's it, that's the low. CSL, tremendous value at $230. It trades in a range between here, look at this, look Carl, look, Your Honour, I rest my case. This absolutely has to be a buy. It looks identical to before, and you might be right. I'm not going to argue with it at all because you might be right, okay? It's just not my style, okay? And I'm always consistent with my methodology, to the frustration potentially of some other people that would look at that and go, that's obviously a buy. Okay, go buy it. Knock yourself out. Just leave me out of it. I've got other stuff I want to put my money on. And that's really all it's about, isn't it? It's like, well, yes, you could buy that, or you could buy something that meets the criteria, and you probably do well on both of them, but I think you've got a higher probability of doing well on the actual setups. That's all it is. So yes, they both have a probability attached to them of doing well, but I think you're better off sticking with the trends. Why no reason to mention it? Okay, no reason to mention it, says Michael. Michael picking on the new kid. Go easy on him, Michael. Yes, that's okay. We'll all figure it out soon enough. Thanks. All right, let's go to JBH. We're not worried about $100. I don't think so, yes. Not worried about $100. No, I'm not worried about $100, but it's not our first rodeo at $100. So interestingly here, actually you would have, under my model, been inclined to sell some there at 100, and probably by pure coincidence, the market crashed afterwards, whatever. The model works more often than not, doesn't it? And sometimes it just turns out that way. No, I'm not worried about $100 because it's not our first rodeo. People aren't, there's no stigma with $100 for JP Hi-Fi anymore. Okay, that's all of them. Let's head back up the list. We'll do the US ones. There's not many, and I understand if you need to leave. I know it's getting late your time. Apologies for taking so long tonight. It's been an interesting session, hasn't it? Let's go back up the list, and we're going to look at US stocks now and a couple of currencies. And the first one we're going to do, I am drawing this out because I need to find it, is KTOS, and this one is for Rupam, Kratos Defence. So we have seen actually DFND, the local ETF, still doing well. I know it gave us a few nervous moments, but it was back in the long setup not that long ago. It might have even been Friday. This one looks very, very strong as well. So whatever the reason for it, I guess we don't care so much about it, I know, but if you believe potentially that fund managers are moving into this sector, they see some sort of strategic importance of having defence stocks at this point in time. I wonder why. So yes, for me, it meets all the criteria. So if I was choosing between this and CSL, I would go this hands down, and hopefully that just settles the matter for me. They both will probably go up, but I would feel more comfortable holding something like this than CSL with its big downtrends. So FRP for me, let me change over to the live market analysis layout. For people who are new, send me your TradingView username. I'll send you links to add these. Well, actually, I don't send you links. They just appear, don't they? They appear in your favourites. So if you click on that, they'll appear in, invite only. They'll appear down here, invite only. Okay, so you send me your username, I'll add you on. You go to invite only. You click the little star on all of these, add them to favourites, right? And then when you go in here, they're in there, and you just add them on. Unfortunately, I don't have a way for you to make them pretty on your screen like I have, to have all I promise you, to the millimetre, these are all lined up of the same heights, I like the OTR on top, I like the volume in the middle, like the RSC. So you'll have to take 10 or 15 minutes to set it that way, okay? But at least you'll have the indicators. And so we go back to KTOS here. And we do have a history. We had FRP there, obviously got hit in the pullback, but held very strongly, and really all I need to do is copy paste here, and I'm going to add a plus 1/3 to that as well. Okay, happy with that one, and it should update shortly. There it is, and I'm going to click that save so we have that for next time. Thank you for that one. Rupam's got PLMR also. Palomar Holdings, even better Rupam. I like this one better than the last one. It's making new highs. Let's go back to the weekly chart and see if there's nothing sinister. It's all beautiful. It's all blue sky. Ladies and gentlemen, think about how good you need to be. Like the world pretty much came to an end for a second there. Bond market, I know it's beautiful now, but it wasn't beautiful for a little bit, right? And it's still not beautiful, by the way. The bond market is not beautiful. But how good is this thing? It is invincible. What the hell do these guys do? Palomar Holdings. Not that it matters to me. Palomar Holdings. Insurance company, specialises in property insurance, earthquake, wind, flood. I don't know why is that so good? Anyway, my point is, and I know I keep coming back to it, CSL or this one, this is the stuff that I think is a quote unquote safe stock. But CSL's a really safe stock, Carl. Okay, well, is it? look at its chart. How can you call it safe? It's plummeting. I'd say this is a safe stock. Thank you for those Rupam. Two really, really, really great setups. Great examples of what I think we should be looking for in this market still. And there's plenty of variety in this market. I get there are turnaround setups. There are turnaround setups and those continuation turnaround setups. ARMN for, wasn't Robert? It was Peter. Good one. Yes, very good one. just that upper shadow keeping me out. Friday's upper shadow. But otherwise, yeah, I mean, Thursday was your buy signal. In fact, really, this Wednesday was your buy signal. So any of those are fine. This was your first test. So that's your first test of this point of supply. And you can see we removed a bunch of supply so that the next time it's easier to get through. Let's just have a quick look at the corner of our eye. For the new people, that's all we use the weekly chart for, nothing else, just to see if there's any big points of supply that might be lurking in the past that could cause us some issues. That one's from 5 years ago, pre-COVID, so I'm not worried about that at all. So no, this is as good as blue sky for me. I'm not fussed about that. I didn't mean to go there. So let's head back here. So happy with it. Look, it's not a now thing, but it's certainly FRP if you've got it. I don't think that's a species-ending event at all. So happy to hold what we've got. And look, next high close, I could go again, but we're probably going to see, based on that candle, just a little bit of a pullback at least, a bit of a dink, and then let's let the dink play out in the next high close after that. But happy holder of that one if you have it for you, Peter. We'll do your currencies in a second, right at the end, and I think that's pretty close. I know Adonis had HODD. I'm in the wrong screen, am I? A few people, Perry saying, no, Perry's giving me the thumbs up. I might have missed yours, Perry. Don't worry, I'll come back. I was going to check before I go. I promise. We're in the right place. Hood. So I'll look at your comment, Perry. What are you saying to me? I will get to them, I promise. Let's go to Robin Hood. I think this is a really interesting setup. Actually, it's one of those turnaround continuation setups, but some really, really strong candles out of the demand zone. It hasn't really dinked yet. I don't know. Look, it probably needs a little bit of work, a little bit of a dink. But if you're going to choose a setup like this, at least see big white candles. I mean, this is the one that I'm drawn to. You know what I like to see. So that is the thing that, above all else, that we haven't actually seen in many of the other case studies. I think that's very strong. Very strong candle here. Actually, very shallow pullback, lower shadow, and then following through. Actually, they're very strong. Hold, little dink, really a inter-day dink, I guess you would call it. I don't mind this one. It's just going against a few of the things I said before, that's all, but I'm drawn to that big white candle. So officially I should say something like maybe another little dink, but you know I don't believe that. I think it's probably ready to go. Just to give us that little bit of price action confirmation, because this is not a trough here. I know it has held, but it's not a trough. So just a trough above that long-term uptrend ribbon, just to prove to us that it's holding. A little bit of a test of this point of supply, I think is important. I think we talked about aggressive setups, and I think if you were to go on this, I would put it in the aggressive camp. I think if you've got it, FRP, so let's say that if you have it. I don't see why you would, but if you had it. Plus 1/3. Why don't we do it this way? Because we know when we've got these aggressive setups, we'll often do the 1/6. So because it hasn't done the dink yet, but there's a lot of other stuff there working for it, we could say run it as an aggressive setup, okay? And just dip the toe in the water. If you're that way inclined, you may say, hey, Carl, I get it, I see where you're going, but why would I bother with that when you've just showed me, three other really, really strong setups? Okay, I'm analysing them in isolation, aren't I? Okay, we better get to Perry's one. Perry stocks before he goes. Where are they, Perry? No. Here we go. Gotcha. PPC. And I know we're going to go from something like that, which is a little bit more iffy or a bit more aggressive, to something like this, which is a no-brainer. It's just bottom left, top right. And I'm sure if we go to the weekly chart, we'll see it's all blue sky. So a great little juxtaposition there of one that has some really great traits to it, but is clearly more aggressive. And this one, which is a bit more boring, probably. But that's boring is certainly beautiful in this type of market, I feel. So FRP plus 1/3 on that one. Click save. And Perry's second one here is TOI. Interesting. He said this is a turnaround play, the Oncology Institute. Okay, yeah, look, I'd say this is a very advanced turnaround play, isn't it? It's obviously, we're not double green, so you're right. But this is ticking all the boxes here for a turnaround setup. The only thing I'm worried about is sort of where that next point of supply comes in, sort of between here and here. But yeah, I think we can give it a shake in terms of, like, if we're looking probably between there's 245 where it starts. If we're getting in here, we're looking at, say, 180, call it. There's a point of supply down here. Sorry, point of demand down here at let's call it 110, just to use round numbers. So we've got about 70 cents that way. And we needed to get to 245, was it? Well, that's more like 65 cents. So look, it's that was the bottom rung of the supply zone, but still, we're looking at about 1-to-1. So I need 1-to-1. I think we're just squeezing it in if we squint. So I'll pay it on the basis that everything else just checks out so well. This is a really, really strong setup. It's a really strong set of candles through here, given the circumstances. FRP plus 1/3, happy with that one. Click save, and if I'm not mistaken, I have done everybody's requests for tonight. So on that note, and given the late time that it is, let's head over to the over here. Just remind you that everything we've discussed is general in nature and it's not taking into account personal financial circumstances, objectives, or needs. So before acting upon it, please consider it carefully or seek the help of a financial professional. Of course, trading, all of these trades that we discussed tonight come with risks, and you need to understand those. It's always you who's responsible for the stuff that you decide to do based upon tonight's presentation and not me. Apart from that, of course, keep calm, follow the trends. Even when there isn't a trend, that's still a trend, isn't it? And we have a set of rules for what to do. And that's the takeaway from tonight. We also like to have a takeaway, and that is we talked so many times about following the rules, about establishing the rules and following the rules. And I think the other important thing is you choose when to trade, don't you? And you can choose to continue trading in this environment, and there is greater risk, but that may also come with greater reward if we're right and we are about to move back into a nice uptrend. If that's the case, if we move back into a nice uptrend, entering now is going to put you in such a great position. You're going to have a lot of early entries, a lot of deep profits by the time you get out of this trend, that it's going to be really easy to hold on to and ride those next positions. But you risk the next rollover and getting stuck in a bunch of stuff in this environment where the next person would go, you know what, I'm just not into this. I'll wait until we get into that nice, calm environment. I'll start at that point. I won't have those deep profits that those other people had, but they had to take risks to get them. But if the market does roll over, then, hey, it won't bother me a bit. You need to decide what type of trader you are and how you want to take it from here. I think you've got sort of my feeling, which is to continue to act in the most conservative way. And really, I think, focus more on those really clear continuation setups rather than trying to, pick the diamonds out of the rough, so to speak. Thanks for joining me this evening. Hopefully you got lots out of it. All the best for your trading and investing. To catch up again, not next Monday, but the Monday after. Bye for now.